Hey everybody, welcome back to the Thursday evening or afternoon, wherever you are in the world, morning. This is the Financial Thing weekly live stream. And welcome to everybody. Thank you for joining us. Today we're going to be doing something a little bit different. We are going to be covering a little bit of news today, but it's kind of been a quiet news week on the peer-to-peer lending front. And I haven't seen anything that's really excited me. So what are we going to do today? First of all, let me just say thank you to our sponsor, to Kuflink. If you have not signed up with Kuflink, you can get, as a new customer, up to £4,000 cash back. That is for people in the UK. And get $4,000, up to $4,000 cash back on your new investment. And remember that terms and conditions apply and that your capital is at risk. You can go to join.kuflink.com/financial-thing. You can find that link on the website, on the Financial Thing website too, under the cashback page. So thank you to Narinder and crew for sponsoring the channel and quite generously giving their support to allow me to continue doing this. And also, if you haven't, you can also check out the Patreon channel if you want to continue the supporting the work that I do. And yeah, that's really what we got for announcements. Now, what are we going to do this week? We're going to be talking about LoanPad. We'll do a quick update on that. As I said, we will have Louis in the future, hopefully within the next couple of months. He'll be coming on to the... I need to mute that. Hold on, there we go. Hopefully within the next couple of months, Louis will be coming on to the podcast. What am I saying? I'm a little confused. Onto the live stream to do a Q&A with everybody. So we're going to get that set up. But next week, 7:30 p.m., we have Andrew Adcock from Crowd for Angels, which is a UK crowdfunding website. We're going to have a little chat with him because I've never had anybody on here to do with the crowdfunding side. So that's going to be a really interesting chat next week. So join me and Andrew next Thursday at 7:30 p.m. Put it on your calendars. We're going to be doing a little bit of news. We're going to look at some of the Money Thing loan updates. See what's going on with some of the loans on there. We'll do a quick market cap on Bitcoin recap. See what's been going on in the week. And then we're going to do top 5 financial investing mistakes that you really want to avoid like the plague. And these are investing mistakes that I've personally experienced myself. So we're going to go through that for anybody that's kind of new to investing that may be watching this in the future. Some really interesting things on there, some very important things to pay attention to. And for people that have been investing for a long time, I'm sure you'll agree with these 5 points that I came up with. Let's crack right into it. We're going to say hi to everybody that's in the stream. Thanks for joining. Mike is in sunny Southampton. Welcome, Mike Powell. Aki Chap in sunny Accrington. Sounds like it's going to be a sunny report weather in the UK. Robert Pates, and I'm sure it's always hot. I heard it was over 40 degrees in Greece at the moment. So, that's hot. Philip in Milton Keynes. Tony Walton in Taunton, Somerset. Colin Perry in the Peak District. Annabelle Nyron. Buenos noches from hot and steamy Spain. Paul Bagworth is here in Kenilworth. Good to see you, Paul. Susan Williams in Southport. Norman P. in sunny Sussex. Akichak says, Lawrence is looking pretty slick today. I was having a really bad hair day, so I had to put a bit of water on the old hair. And Mike said, I haven't been looking in the right place. We've just won the Lendy case. You know what, Mike? You are completely right. I have not been looking in the right place this week. Let me see. Mike, you know, one day I'm going to have you come on the stream with me too. Because I would like to chat with you. You seem to be very experienced. Let's see. Investors to get 10% of proceed. No, that's not the news story. That's old. What am I looking at here? Where is the news on that, Mike? Fill me in. I'm presuming if you won the court case, that means that Lendy is not getting any of the allocation that they are supposed to get. I'm presuming that's what the news case victory is. If so, congratulations. That's a huge victory. Hopefully the administrators will not suck all of the money out of Lendy. Go ahead, again, if you can hit that thumbs up button for me, please do so. And get that out of the way, and subscribe to the channel too. Yes, Mike, I know I'm totally lacking on that today. I don't know why I did not spot that. I've been a little bit all over the board this week, and my mind is not exactly in the right place today. So I guess I have to look at the Lendy Action Group. Okay, let me take a look really quick because I need to see the news. What's going on with this Lendy thing? I know I was logged into my other Facebook account that I am not a member of that action group under my other account, so that's why I missed it. Let me log in here, see what's going on. Should I get the applause ready? I hope so. I think I'm going to get the applause ready with the sound effects, but let's see here. Lendy Action Group. What do we got going on? Great news. Sorry. Great news. We won. Yay. That is amazing. Lisa Taylor heading that up with all of the other people on the Lendy Action Group. Here's the technical bit. The judgment in the application to court for directions brought by the administrators has just been published. The court has found that no part of the deferred interest belongs to Lendy. That's huge. It's all property of M2 lenders. The waterfall, that's anything payable to Lendy from loan proceeds. It should take priority to amounts payable to M2 lenders. It's unenforceable. That is excellent news. Number one, there will need to be analysis of the cash at the bank to discover what can be traced to recovered default interest. The administrators will need to review all recoveries to date and apply the default interest recovered to the relevant loan holders. That's a long post, but it seems like victory is here. And what I'll do is I'm going to make a separate video about this because obviously this is very important for people that have invested through Lendy. When was this posted? Oh, it was posted an hour ago. Well, no wonder I didn't see it. That is fantastic news. Really, really, really good news. And you know, regarding the Lendy situation and them being in court, I was thinking that if the courts decided against the investors on this particular waterfall point, that you pretty much just give up on the legal system at that point, because I just couldn't see any way that Lendy would be entitled to anything when it came to this case. But thank you again, Lisa Taylor, Mike Powell in the stream, and Norm for the counsel and everything that you guys have done. That is amazing. Well done. Brilliant. Yeah, Mike says it's like 1066. All that happened. Meanwhile, nothing happened in Belgium. Yeah, totally ridiculous that I missed that. But hey, I'm a human being. I had some things going on here in Orlando. But congratulations to everybody within the Lendy Action Group. We'll see how much money gets returned. That's going to be the key. But who else is here? That was a quick summary because, again, it was just posted an hour ago in the Facebook group. Mike Mason is here. We got Alan Stratford, Alan Lomas in Chesterfield, and who else? Stephen Haling in Nottingham, and Dan Barber in the Derbyshire in the High Peak. So again, victory for the Lendy Action Group and in court. I know that some money was put together by investors, myself included. I did contribute to that legal fund, and it was used in a good way, and it was used for victory. So anything that we can do as investors to put the kibosh on Mr. Liam getting any money that he doesn't deserve is a good thing. So congratulations, that is awesome. Hi, Gail in Bulgaria. So yeah, we'll talk more about this Lendy situation probably next Thursday. If not, I'll be making a video about it because that's just super exciting news. Thanks for bringing that to my attention, Mike. I'm actually not on Facebook too as much as I should or shouldn't be, because I find it very distracting. It's one of those things that I get on there and then 30 minutes later I'm just scrolling through them and looking at things, and I think, wow, it's very addictive. So I try to only log in maybe once or twice a day. Anyway, thanks to everybody who is tuning in. Let's get right to it. We'll do a quick loan pad update here, and let's enlarge this for you so you can see it. Here we go. Yeah, they finally hit Louis and loan pad over the 100 loan mark, now at 103 live loans. The loan book is growing, 37.6 million pounds in loans, the total loan value of 81 million pounds. So you've got still a loan to value 40%, very reasonable. Yeah, nothing has really changed. You've still got this really fantastic liquidity. Estimated time to sell less than 1 day. Estimated time to invest less than 1 day. And still this one troublesome loan in the ICF, which is the provision fund, but it's only 150,000, so not terrible. But they are using up their ICF on this loan. So 24,819 pounds of the ICF has been used up. I'm going to try to get the lowdown on this loan and see what's going on with it. It's been in this ICF for several months now or longer. So I'll get an update from Louis. Hopefully when he comes on the stream, we'll ask him about that. Let's look at a couple of pieces of news. Kuflink is introducing instant bank transfers using open banking. That's good. So it's going to be allow users to transfer funds and update their e-wallets instantly. So I know in this world of instant gratification, that's really good news. If you're a Kuflink investor, you want to get money in there quickly, instantly. Now you'll be able to use open banking through their systems to do that. That's really good. That's really good. That's one of the things that I'm hoping within financial industry sector starts to really improve, where we can get money where we want to get it very, very quickly. It has been decreasing the amount of times, but there's some companies that it still takes, a day or so, a business day to get money into a deposit account. It shouldn't be like that now in this day and age, but it's still continuing. But yeah, Kuflink is making strides to make instant transfers a reality, which is really good. We're seeing Just Us readies for a Seeders campaign. Yeah, another peer-to-peer lending company go ahead and getting money from investors on Seeders. You know what my thoughts are on Seeders and funding these companies, and I'm not a huge fan of it. I think it's high risk. Liquidity could be a problem in the future, but see, Just Us is one of those companies doing it. Okay, let's look at, I wanted to show you this. This is pretty interesting. This is my Funding Secure account, and this is one of the loans that is in default. This is in Gold is Green in London, and this you can look at the notes going all the way back to 2018 here, where they're trying to get the property refinanced. Didn't happen. I could see back then that things were starting to turn for the worse on this property. Well, now unfortunately it looks like the borrower has actually passed away, and again this really goes to highlight some of the problems that can happen within lending, not just peer-to-peer lending, lending in general. If proceedings go into effect to recover a defaulted loan with security on it, like a house, something happens to the borrower, whether it be through them going to court to stop the default or just delaying things. We've seen that many times happen, where shady borrowers will put a spanner in the works of the legal process and delay things. But in this case, we've actually seen a borrower, unfortunately, that's passed away. So it says here, as the borrower has passed away, solicitors have been unable to issue a possession claim. Instead, an application has been issued to attempt to appoint the borrower's widow as a representative of his estate in order that a possession claim can be made. The application is listed for a hearing in August 2021. And I think this is a case where you could see real delays on this loan because it's, number one, it's a sensitive issue. So some courts, some judges are going to be very careful with the way that they handle such a thing. And then you have things like probate, because again, the widow is taking over the possession of assets. So this could be a problematic loan, and especially since it's in administration, could really drag on and on. And as you can see, we're talking 2018 of November. Now we're in year 3 of this loan, where it was having problems, and could take another 6 months to a year to really sort out what's going on with this loan. So I just wanted to highlight some of those issues, and so you could be aware, if you're investing in peer-to-peer lending, that not everything always goes very smoothly. Let's take a look at a couple of these MoneyThing loans that I thought was interesting. So MoneyThing has put up some updates, what the administrator has, and you can see here this was a loan in Newcastle under Lyme. I don't even know what that is. I just knew Newcastle upon Tyne, but I've never heard of Newcastle under Lyme. Loan value of £2.2 million, so pretty big loan. I thankfully didn't have very much money invested in this one. But you can see here there was a professional negligence claim against the valuer. So basically the valuation that MoneyThing received on this property, they believe was incorrect. And so a professional negligence claim was launched against the valuer. Also, there is a claim against the director's personal guarantee. I don't think personal guarantees are worth very much at all, so whether anything gets collected from that is highly unlikely, I believe. And also, these professional negligence claims are very hit and miss. I don't know what the success rate of things like that are against RICS valuation companies, but I would imagine not too high. You can see again, this is going to be something that drags on and on and on. We're here from August of last year, 2020. All claims are underway. So we're a year in on this one, trying to make progress on this default. So we'll see what happens. This was a Ferrari that I've talked about in the past. Where is the Ferrari? And with the updates on this one, this is pretty interesting. The administrators remain in office and have so far received monies almost sufficient to cover their costs. So this was back in February of 2021. So the administrators, of course, are getting their costs covered with the recoveries, but further recoveries are expected in the coming months, which means they will shortly be in a position to make some returns to MoneyThing. And then, due to the outstanding costs and management fees owed to MoneyThing, this is not anticipated to result in a return to lenders in the short term. I haven't really looked at the research on this loan. I know there's some other intricate parts to it, to this RCC loan. But still, 6 months on, joint administrators haven't distributed funds to MoneyThing as of yet. And there's no further report at this time. So again, just shows you how long things really take. I don't personally expect to get any money back on most of these defaulted loans, unfortunately. Here's another one in Birkenhead. I don't know, there was one of them too. Oh, here's another PI professional claim. I think of negligence. Yeah, another professional negligence claim that was started in May 19th of 2020. So, a year plus on, still nothing happening with that. Again, I think these claims are probably not going to be successful. So there is that one. We have this Paisley bridging loan value of £500,000, and the property was sold by the administrators of the borrower for £377,000. That was posted in an update August 10th. So you can see here another case of the asset value at 1.2 mil and loan value at $500,000 loaned on an asset value of 1.2 million and a recovery of 377,000. When you take off the fees, the administration, the legal fees, not going to be too much left on the end of that one, so that's going to probably be another loss. And this is a case here of a development, and this is another huge loan, almost £2 million. And what's interesting about this one, back in February of 2021, the joint administrators of the borrowers have not been able to achieve building control sign-off on the upper site properties. This appears to be due to substandard work carried out by the contractors engaged to complete the build process. Again, another example of something that you probably wouldn't even think would happen if you were lending money on something like this. Back when I lent money on it, being inexperienced in peer-to-peer lending, I really didn't think about the consequences of subpar work from contractors. And then, you think, well, that kind of thing could also be taken care of. Substandard work can always be redone, but now you're in administration, everything now is a hurdle and a problem. And 6 months on, August 10th, nothing further to report. So absolutely very little or no movement on this recovery of a massive loan of £2 million. So some of the things to really pay attention to within peer-to-peer lending. If make sure you know what the pitfalls are if you're new to peer-to-peer lending. Not all is bad. I tend to highlight the more interesting news pieces, and I think something like that. Look at the rate on this too, on this loan, 14% a year was what investors were had the carrot dangled in front of them. So we're going to talk about this too in my 5 things you want to avoid when you're investing. Rate chasing, perfect example right here. 14%, wow, looks great. Yeah, not so great now that the loan is in trouble. Let's have a quick look at what is going on in the cryptocurrency world. We've had a really good run. Obviously, there's a bit of a pullback. If you look at the last week, we've had some pretty good gains, down from 40,000 up. We went up to 46, now pullback of about 44,300 in Bitcoin. So we've had a good run. We're going to see these again, these times of volatility, but Bitcoin continuing to be supported with lots of buying action going on. Ethereum too has had a really good last month. I think we're up. Let's see. I don't know what the calculations are. I think it was about 30%, but we've gone all the way in the last month from $1,923 US, and now we're sitting about $3,100 US. So big gains. Again, we're down today about 5%, but not the end of the world. Big things coming for Ethereum, and one of the things too, which is very interesting next year, when they switch from mining to proof of stake with Ethereum, you're going to see some big changes there. There's a lot of Ethereum locked up in staking now. You can see here 6,660 coins at $20 billion US of value. Now that cannot be touched until Ethereum 2.0 is released. So that's going to be locked up for probably the next 8 months to a year. So that's a good thing for Ethereum's price. Yeah, so really good, some good movement on cryptocurrency at the moment. I think you will continue to see these pullbacks if you are interested in getting into cryptocurrency. Good time to buy when the markets pull back. If you cost average in. A lot of people always email me and say, is it too late now to get in? No, I don't believe so. But yeah, so that's what's going on. And now we're going to get to, we're going back to school today for people. And this is mainly for people who are watching in the future and too, if you're interested in investing. The 5 biggest investment mistakes that can really hurt you and should definitely be avoided like the plague. So let me show you this. I spent many hours creating this today. Hopefully no typos. We're going to go with number 1. Definitely not investing, I would say, is the number 1 biggest investment mistake that people can make. Number 2, panic selling, for sure. Number 3, chasing returns and mistiming. Number 4, not diversifying. And the biggest of the top 5, I don't know if this is the biggest, but taking advice without researching. And I'm going to go through these 5 points and tell you about how these things have affected me personally, through my own experiences. So number 1, not investing. Fear, future events aren't real. I did not start properly investing until I was in my early 40s. Mainly because of this fact right here of fear. I had a lot of fear that I was going to put money into the stock market and the markets were just going to crash and I was going to lose all of my money. It's not a realistic thing that happened because honestly, if we look at the history of what's going on with, say for instance, the S&P 500, which has risen. It's risen a lot over the years. I mean, if you look over the decades of when the S&P was started to where it is now, you're going to see big movements in the S&P 500, right? So look back here in the 1990s and how this has risen. So my fear was really unfounded. Of course, we've had these times of up and down points of movement. But in the long run, the stock markets have generally always trended up over the very long term. Of course, you had these drops here. This was the COVID drop, 2020. We've had these market crashes in 08, and then the dot-com bubble bursting here in 2000. But generally, fear is not really a good reason to not invest money. So the second thing is just lack of understanding. There's just so many investment choices out there that a lot of people don't invest because they don't know what to invest in. So once you really start to understand investing, and you can break it down into a pretty simple way to do it. It doesn't have to be complicated, right? A lot of people say there's just too many options out there, and I think with the understanding and the options, one of the main things to look at is what do I want to invest in? And now you know that I'm a big fan of the US index equity tracker, which you can invest in this sort of broad equity tracker, S&P 500, NASDAQ, and the Dow Jones. And if you understand what you're investing in, you can see on this tracker that you're getting shares in Apple, Microsoft, Amazon, all the big companies that you know, and all the way down to the small companies. So you got Visa, Johnson & Johnson. If you go right down to the smallest companies, let's say page 310, you got companies that you never heard of, but there's banks in there, there's bio companies in there, biotech. So you have a little mix of over 3,000 stocks that you're going to get. And once you understand it, it's really simple, right? It's not a difficult thing to understand. But you just have to do a little bit of research into what you're investing in, and that really makes everything easier. So let me load this back up again. Oops, hold on one second. We don't want to share that. So yeah, that's the number one thing you really want to avoid if you're afraid to invest, just not investing at all. You don't want to be in that boat. Number two, panic selling and mistiming the markets. When markets correct, people tend to panic sell and lose their money. And we've seen this recently, actually, during this year. So there's a story here of 39% of crypto investors have sold holdings over the last year. What they don't tell you about, there's a lot of them sold when the markets were starting to really bottom out. So a lot of people that I know bought crypto when it was, especially Bitcoin, in the $50,000 range. They got freaked out when it started to go into the low 30s, and they ended up selling at a loss. Now that's a big mistake. So holding on to the crypto is a much better, and even stocks, when you start to see the stock market correcting, the best way to handle those situations is just really to hold, because mistiming can really, really cost you. The average investors have absolutely no idea when the highs and the lows of an investment are, so they don't know when to get in, they don't know when to get out, and they usually make timing mistakes that cost them a lot of money. So buying and holding is the best strategy for 95% of investors. Chasing returns by FOMOing. That's my number 3 thing. And this, I've been an absolute victim of this myself by seeing a stock that was really going to the races. I did it in GameStop in a very small way. Ended up buying it, I think it was $270. I bought a few shares. Piling in, it was the FOMO, the fear of missing out. And then, of course, we know what happened to that stock. Now it's about $164. So I know people personally that went in at over $300 per share, thinking, oh, this GameStop is just going to keep going up to $500, $600, $700, which didn't happen. And they ended up losing a bunch of money. We can see here GameStop, again, right now, these spikes we saw close to 300 here, over 300 in this range. In June 2000, I think it was, end of June 2021, people who bought in at these high ends of FOMOing into a stock that's probably not the best stock to be buying into. That's a big investment mistake. And you can see here on Dogecoin, of course, if you've not been living under a rock, you'll know what Dogecoin is. And you can see it started out very, very low. It used to be basically worthless, and then we saw this huge spike up to almost, I think it was 71 cents. So we've gone from 0.000 worth 0.12 or something like that, all the way up to 75 cents. We had a ton of people FOMOing in, buying in at 40, 45 cents, 50, all the way up to 70 cents, and then watching this massive crash that we've seen down here, where it went back to about 33, had a small spike again, and then continued to really bottom out about 17 cents. And it's been making a bit of a recovery, but again, FOMOing in, chasing those returns, bad idea. And we saw it in peer-to-peer lending too. The people that really chased high returns with the peer-to-peer lending companies, like Lendy, MoneyThing, Funding Secure, who are offering these rates of 10, 11, 12, 13, 14, 15, 16% a year. They got people to come in because people saw those returns. And that's what happened to me when I first started peer-to-peer lending. I saw these returns, I'm like, wow, I can get 10%. This is insane. And I put a lot of faith into those companies thinking it was real. And of course, ended up getting burned by FOMOing, fear of missing out, and chasing interest returns. So that's the third mistake that you just want to avoid. Stay the course. Realize that when you're getting these huge returns, you are taking huge risks, and that can really turn around to bite you. Number 4, not diversifying. I had an email from somebody that put, I think, 80% of their life savings into Wellesley & Co. And they bought into the advertising and the brand name, and they didn't diversify into really any other peer-to-peer lending company. And of course, we know what happened to Wellesley and Co. Also went into administration, and that has really cost them dearly. So diversifying is a huge mistake. Not diversifying is an absolutely big mistake. Chasing sectors that are hot. You've seen me do it on the Trading 212 portfolio. Sometimes it goes well, sometimes it doesn't. If you want to look at those videos, you can. You can see that I went sector chasing with that portfolio, and it did really well. I got very lucky with the timing, but I wasn't diversified. At one point, I was very heavy into tech, and then went very heavy into energy and oil, and saw that the portfolio got hit because of that, going from 16,000 plus pounds all the way down to 12,700. So quite a big loss, even though the portfolio was up still. But sector chasing like that, not diversifying enough, makes for high risk, high volatility. And you can see that cryptocurrency, stocks, and peer-to-peer lending, especially with crypto, a lot of these people chasing these altcoin returns, things like Dogecoin, some of these other high-risk coins that are out there. There's over 11,000 projects out there. And I always say, just be careful with just putting too much money into one thing, because if that project or that stock crashes, you're going to be wishing that you would diversify. And then number 5, taking investment advice without researching. This is huge. Listening to friends, listening to social media influencers, and not paying attention to the economy. I have done this. I listened to a friend many years ago who gave me this stock tip, and that stock, as I told you, it was Norseman Gold, went to absolute zero. So stocks do actually go to zero, so it was a high risk stock. I knew that going in. I didn't know anything about the stock. It was before I was even remotely interested in investing, and I put the money in, and the stock went to zero because I listened to my friend. Social media influencers, don't listen to me. Do your own research. Just because what I tell you doesn't always necessarily mean it's correct. This is not financial advice. And then also not paying attention to what's going on in the economy. This is a big mistake that I made very early on in investing, and now I pay very much attention. What we're seeing right now is this separation between what's going on in the stock market to what's really going on in the economy. So if we live in this fluffy pink cloud bubble, and we look at the stock market, we might think, wow, the economy is actually must be really doing good. I mean, the stock markets are reaching their all-time highs, right? But the reality is, if we take America, for instance, which I think is a good barometer of what happens, with the kind of global financial system, when the US starts to struggle, has that domino effect on other world markets. We can see this massive debt problem here. It's actually a lot worse now. We actually see 20 trillion here on the chart, but now we're down to approaching $29 trillion. But this is a big problem in the American economy. We're also seeing today, actually yesterday, that inflation has started to really spike. Even though some of these news stories might tell you that the economy is rebounding, I personally think that's a bunch of BS. That inflation in the US is now at 5.4% for the year, which is huge. CPI, cost price indexes, food is becoming more expensive. Pay attention to the economy. It's happening in the UK too. Inflation is rising. Things are getting more expensive. I don't think this is because there is a lack of things like building materials. I think this is a real economic issue through debt printing that is happening, inflation coming from debt printing. So pay attention to what is going on in the economy and do your research. Don't take advice from people without doing your own research, and make sure that you understand what you're getting invested in. Just because I'd say Bitcoin is great, you should do your own research and really understand what Bitcoin is and why it might be good or bad for you. So those are the 5 biggest investment mistakes that can really hurt you in the long run. Number 1, not investing at all, being scared. Number 2, panic selling. Best, if you're an investor who's not advanced, you don't know what's going on too well, Just hang on, buy and hold, keep buying through the lows and the highs, through the dips, dollar cost, pound cost average in to your investments. You could do a cryptocurrency and stocks very easily. Just buy every month. Don't chase returns, and don't try to time the markets because it's virtually impossible. It's cost me, I can't even tell you how much money trying to time the markets. Number 4, not diversifying. So make sure that you diversify into different investments and not, just within stocks and within cryptocurrency, within peer-to-peer. Have other things if you can. If you're able to do it, have some cash. Maybe have a little bit of precious metals, some property, if you can do rentals and things like that. So diversify out. Don't chase what's hot right now. I've been chasing oil and energy. You've seen what's happened to the oil prices, and the oil stock prices recently have gotten hammered. Case in point, important to diversify. Number 5, taking advice without researching. Don't listen to what other people tell you. Do your own research and become comfortable and understand what you are investing into. So there you go. That was our little school lesson today. If you have any questions or comments, put them in the chat. We're going to get under an hour today. This is going to be probably the first time, I think, that the live stream is under an hour. It's amazing where the time actually really goes. We'll do a little bit of Q&A, and if there isn't any Q&A, then I do have a couple of email questions that were sent in that I'll address. Mike says, Lendy, RSM have won 3 negligence claims. So that's interesting. I didn't think that negligence claims were very easy as far as I understand. I have a family member that is a barrister, and he said negligence claims are very difficult to win. There's a lot to prove there. You have to really prove. See, hi Dave Dawson, nice to see you. Natalie G, in your opinion, is it still a good time to buy stock given the debt and inflation issues? Are we in a bubble near the top? Yeah, right now I think that what is happening is, as long as the governments continue to pump money into the economies and the yields stay low, that I don't think we're necessarily at the top. Now, that's not to say that we're not going to have a stock market pullback. I think I wouldn't be surprised if I were to wake up tomorrow morning and see the markets had corrected to some degree, maybe 5 to 10%. But I don't think we're ready for that big market correction, which on paper should happen. And I mean, if the governments pull the plug on the money printing, that happens instantly. I believe the markets topple at that point, but I don't think they can do that at this time. We're seeing talks of maybe tapering of the quantitative easing. I don't think that's going to happen. I think it's just talk by the government. So, but you can pay attention to those things. Pay attention to the, especially in the US, the 10-year yield. Once that starts to spike upwards, that would be an area for concern. And then when the UK or the US government decides to stop printing money, that would be a time when people will get scared, and that could be the end of it. I wouldn't try to time the market, Natalie. I think it's very, very difficult to time. I would continue just to, if you're not close to retirement, just to keep buying. And, every month, if you were continuing just on your path of wherever you've been through your life of investing. For most people, that's not taking big chunks of money and popping it into the market at one time. It's putting a little bit in each month, or what you can afford, and just stay the course, Stay the course. I think that's very important. If I'd listened to my own advice on occasion, I would have saved myself some real headaches, because I have definitely tried to time the market, and it usually doesn't work. So the Lo-Fi Medic, That's a great name. I like that. What are you looking for when you are researching? Um, that's a pretty big question. What am I looking for? As far as investment goes, and you try to find undervalued equities and stocks, things that you think are undervalued. You could look at the financials of companies, you look at their balance sheets, their projected earnings, and try to find one that is undervalued. That's kind of basic 101. It's time consuming, difficult to do if you're not very advanced, but I think for most people, just buying an index tracker is really a way to go. You know, you're going to do just as well with that, probably better than you would trying to pick out stocks. Some thunder. Mike says, certainly a good time to buy good UK equities. It appears everyone has their checkbooks out. Some mental premiums on current price being offered. Yeah, I'm not a huge fan of UK equities. That's just me personally. Not to say there aren't some good ones out there, but I think in the same way that if there is a market pullback, UK equities are just going to get hurt, just like US ones. And I'm just more of a believer in the US companies than necessarily the UK companies, just because the UK market cap is so small and it can really get hurt. If you look at the FTSE over the last 20 years, you're going to see not much gains over certain periods of time. I think what the FTSE is, let's have a look at the FTSE 100 today. Where, let's see, so let's have a look at the FTSE. Wish there's a way to compare it. So yeah, I mean I think it's hard to pick out individual stocks for most investors, but you know, I always tell people that in the UK that just won't invest in the US or Asia because they don't believe in it or they're afraid. I look at these numbers here and you can see, I mean, look where we were at the FTSE in 2018 at its high point, 6,185. So you're a very long-term buy and hold investor in the FTSE. You saw basically a lost 15 years. So right here, say 6,700. I mean, this obviously was a bad time to come into the market here. But from January 28, 2000, we were at 63.75. And we got back to that number almost 13 years later at 62.86. So yes, if you're an advanced investor that knows how to pick out individual stocks and to screen them, I'm sure you can find some good UK companies. But you didn't really get much in the way of gains from this almost 20 years of being if you were to invest in a FTSE 100 tracker. You know, you have to look at the history. I know that's all we can really look at is the history, but do you want to gamble on the fact that you think that the FTSE is going to be okay? Whereas you look at the S&P from 2000, the year 2000, even if we go January, 1400 up to 4,000. I mean, I'm just going to basically go off of a history of what I see happening with markets, and I don't see the FTSE being able to keep up with the S&P. Of course, that can change. You know, of course, history is no indication of the future, but all we can do is look at the history. That's why I'm not a huge fan of the old FTSE 100. I wish I were. I used to be so patriotical. Is that even a word? You know, I had BP stock. I had BT stock. I had all these UK companies and they just didn't perform. I only had small amounts, but looking back, yeah. On Kuflink investments, what do you consider safe? loan to value roughly the lowest you could possibly get. 60% is better than 70%. So if you can find ones with 65, it's good. I try to target, I don't think you want to be more than 70% loan to value. 65% is safer. Yeah, as other people are saying, most of the Kuflink loans are getting repaid anyway. The loans are only problematic when they're problematic. So hopefully Kuflink continues upon that path of doing things the right way. And the loan to value obviously wouldn't become an issue until the loan actually, if it went into default. Patriotic, yes, that's the word. What did I say? Patriotic. I don't know what I see. I'm just not very patriotic when it comes to UK investing. Even though I am, of course. So we hit it now. I think we're going to wrap it up. I hope that you got some value out of that. Again, hit the thumbs up if you can. We'll be back next Thursday with Crowd for Angels. We're going to do something a little different next week. Crowd for Angels. Andrew is going to be here talking about what they do on the crowdfunding side. And we'll do our crypto update, of course, next week. If you're interested in crypto, I highly recommend using Coinbase or I don't know if you still use Binance. I think you can, but some banks are putting the kibosh on you getting money into a place like Binance. But also consider getting yourself a offline storage wallet, because crypto platforms do get hacked sometimes and you want to be able to control your assets. So yes, definitely do that. We'll be back next week. Thank you to everybody for joining. I love you all, and enjoy being here every week for you. Don't forget to join the Facebook group if you haven't. Congratulations again to the Lendy Action Group people for making that happen, because without them there would have been no victory when it came to Lendy. So yes, congratulations. Big thank you to Mike, Powell, and Lisa over at the Lendy Action Group, and to Norm. And I'll see you next week. Have a great weekend. Be safe and take care.